Hello, everyone. Welcome to the weekly stock talk. This is Eva. Hello, Ben.
Ava, how's it going today?
Great, great, great. Okay,
That's
let's
good.
get right into it. Another
Sounds
week,
great.
another central bank meeting. This time I think it was FOMC. That's the US Central Bank.
That's right. Yeah.
Um, I think there was no chance of cutting. Market wasn't expecting that. But was there anything interesting from their comments, their body language?
So same kind of thing. They've been generally staying with the view that the economy is actually doing a little bit better than they expected, that yes, inflation's coming in. There wasn't really much of a reaction from it. Markets correct a little bit, and I guess yesterday we saw the US dollar rally a bit, gold sell off a little bit, but most of that got reversed today. So there wasn't a huge reaction. Most of what they said was really similar. We're getting closer to things looking better before we start cutting. There was some other charts and slides and data and things that I read from other economists based on what's happening, Michigan sentiment, stuff like that. But the from Powell, not much change. There is the increasing probability, at least in Canada, that rates are going to get cut again next month. But what Powell said, not too much.
Okay. Also, I see reporting season is coming to an end. Um, how would you summarize this earnings season?
Yeah, so pretty different between the two countries. So Canada, the Canadian company is something like 50% beat expectations. In the US, that number is closer to 80%. So continued divergence, a lot of what we've thought, right, where the Canadian economy is struggling a bit more. So Canadian companies are struggling a bit more as a result of that. And so, you know, earnings typically, though, when you have a period of time where you miss for, we'll say, a quarter or two in a row, then the next quarter or two in a row tend to have better results. So, you'd kind of look at that in some of the sectors and maybe say, okay, what beat the most in the US and how did the market react to that? And maybe that's a sell signal for you. And then in Canada, maybe you say, okay, what missed by the most? And is that an opportunity for us here because the market sold them off and maybe we buy them? So that's how I'd kind of summarize it. US did a lot better than Canada, but opportunities are probably the opposite of that from a stock picking perspective.
Okay.
Yeah.
Apple and AI, they seem to be grabbing all the attention. Is this good news for Apple, the consumer? Tell us a bit about it.
So I think that it's good news probably for Apple. They're getting a lot of attention. Uh, it, what Google, I think, were the best at back when they decided that they would be Google was I think both of the founders really thought and saw the future and saw data was going to be worth something. I don't necessarily think that they would have said that, this AI, this was going to happen and paint the path, but they knew that data was king. And so I think Apple now, because everything goes through your iPhone, not everything, but most things go through your iPhone, that
Absolutely.
everybody's data is in there. And so the more they can get access to the information, the better the AI is going to be for them. It's probably not going to be better for the consumer's experience, but I think it's going to be better for the company.
Okay.
Yeah.
Let's see the charts today.
All right. Sounds good. Just let me know if you can see that okay.
Yes, yes, we can.
Yeah. Okay, perfect. So this is great chart. Actually, Tobias Lütke posted it on Twitter. He's the founder of Shopify. So he's been a big advocate for Canada, obviously, and Canadian business. And so he posted this today, which I thought was a great view on just really what's happened to the employment sector in Canada. Well, over 10 years, but mostly since the COVID. So this is where, I mean, there's a lot of talk around going around what's going on with the budget and why and how much spending, and we could speak for a long period of time about that, I'm sure. But this chart is stark. So when you look at it, the amount of jobs that have gone to the public sector versus private sector and self-employed, this is a massive divergence, and not necessarily a healthy one, at least in my view, anyways, for where Canada should be long term. So this one really jumped out at me, and it's like it really shows you how materially all the jobs have come from the public sector in the last many years. And so, as a result of that, it's obviously creating jobs, but not necessarily a healthy future for the economy in Canada. So two more quick ones. Let me just see. Yep. So wanted to talk and continue to talk a little bit about bonds. And so further to what I talked a little bit with Powell this week was not much said there, but we had Michigan consumer sentiment, a couple of readings there. One was how many people like expect your income to keep up with inflation. That number's at a historic low. And effectively, the consumer confidence is at a historic low, which kind of matches up with the household debt levels in the United States. And so you kind of get this a period over here where things are still moving along okay, but behind the scenes, things are getting a little bit more challenged. And since the U.S. economy is 70+% consumption, if the consumer gets under pressure, then the economy gets under pressure. So with that being said, when you look at and why that would matter, at least from an investment thesis perspective, is if the economy is struggling, you start to look at what you might want to own is bonds. And so this is a case of the long term. We look at the long term U.S. 10-year. We kind of reached up towards this 5 level briefly. Now we've been hovering around the 4.5, 4.4 right now. These are long-term trend lines, which I think there's a lot of resistance at that 5% level. And so if we get a bit of a crack in the economy, I would expect that this certainly reverts back towards a lower level. And so I still think it makes sense to have bonds exposure in the portfolio as a result of that. The other piece is, or at least on this chart, is consensus. And so as things move up into this category, which we haven't been up here in a very long time, is people are extremely bullish on bonds. And we've been hovering around and below these levels for an extended period of time, almost 18 to 24 months. So my view is you get when things do shift, you probably see a pretty material rally there in bonds. With that view, if the economy continues to slow in the U.S., I think gold probably does well in that backdrop too. But it's something that I think we need to be conscious of from an investment perspective. So the other pieces would be core CPI and US CPI, US CPI. So it's a good way to look at it. And, everyone's, I think, so focused on that absolute number. We're still at a high level, but ultimately what matters is the rate of change of these numbers. And so as we continue to see May numbers come in, CPI in both Canada and the US has actually come in a little bit slower than expected, which is ultimately, I think, probably going to give the central banks a sigh of relief. But also the challenge becomes now is how to stop it if it continues to fall. And so let's see how this goes. But inflation continues to come in, so that view is that inflation continues to come in, and interest rates will likely get cut as a result of that. And so we'll continue to update you on kind of timing on that.
Great, great. Anything else caught your eye this week?
I mean, one of the things going on right now, there's a bit of an election going on in France. And so there's been a lot of back and forth fighting, who's going to win, who's in power, who's not in power. Very interesting. Bonds in France got hit quite hard this week as a result of that. So that's a little bit destabilizing to Europe. And, France plays a pretty material role for what's going on with the Ukraine and Russian crisis. So you don't really want to destabilize France. So that was something I think we need to be a little bit conscious of. The other
You're frozen there, Ben.
we're thinking, whoop, am I still there?
I can hear
Can you
you,
hear me?
but can't see you so
Okay.
much. Okay. I think it's
Okay.
good now.
All right. Okay, perfect. So Saudi had, since a long time ago, they've been pricing all of their oil in U.S. dollars, and so their agreement was set to come up this month, last week actually, and they didn't renew it. I don't know if they did or they didn't, but there's a lot of news and buzz around it, and so they're talking about potentially selling their oil in euros, renminbi, rubles. Rupees, and US dollars. And so that's pretty material change if that happens, and something I think we need to be conscious of, because if there's not as much demand for US dollars, that has multiple trickle down effects into the world, because US dollar continues to be 80+% of the daily transactions that happen in the world right now. It's in US dollars, and a big chunk of that would be US dollar or oil related. And so, the US is 50% of world GDP, but 80% of transactions. So if we get a decent correction with that, where oil starts to price a lot less in US dollars, that has knock-on effects to the US dollar. And so that'd really be another reason why you'd want to own some hard assets like gold. But that was a pretty material thing that's been happening the last week or so.
Okay. That's something to really look out for. Anything clients should be watching in the coming weeks?
So I think that I know we spoke last week a little bit about watching the bond yields, the 10-year bond yields, and I think that'd still be a good place to watch and pay attention to. And the US dollar, I'd be watching more too now. And so I saw, Canadian dollar has been weak already, but I did see a couple of places that I follow talking about shorting the Canadian dollar versus US here. And so I'd continue to watch that, and may look to do something there. But I'd continue to watch that 10-year bond in both Canada and the U.S. If the levels stay stable, then things are fine. But if you get a big move to one way or another, that has a pretty material effect on equities. So I'd be continuing to watch that number.
Great, great, great. Any parts in short?
I'd say again, same thing each time. If anyone needs anything, I know Eva, you've been booking meetings for people. If anybody needs anything, certainly let us know. And we're happy to spend some time, give you an update. So I'd say that's it. Besides, hoping everyone has a good weekend.
Great. Have a good weekend, everyone. Bye. See you next week.
Thanks, Eva. Bye.
Bye.